Hello again, and let's take a look at a few more examples of our swing reversal and the swing transitioning pattern, and also how to time the entries. And I will try to point out a few different examples because markets are never really the same. Although the patterns repeat themselves over and over again, you will never have two exactly the same patterns, so it is very important that you get experience by looking at different market phases, different transitioning periods, and so over time build your knowledge, build your experience, and also build your playbook. And at the same time, I want to highlight the importance that anything that you learn here should not be only applied as black and white templates where you just try to hunt signals and try to hunt setups, but I really want to encourage you that you try to apply your own thinking to it, try to analyze the markets, buyer-seller dynamics, how the trend waves, how swing highs and lows shape up on your charts, and then try to read the markets with that knowledge and try to understand and get into the mindset of how people position themselves on the market and then use that to your advantage by making good trading decisions. So let's start here with a recent example on the New Zealand Japanese yen. You can see we were in a massive uptrend, and then at the same time we had a few breaks of the moving average, and here's a very good learning opportunity. You can see we have a break here. Let me mark that, or a gap better, and then also here is also another gap, and you can see always after the gap we broke below the moving average, which is not a signal to enter a trade. And in Forex, when do gaps happen? And the gaps only happen, or in 99% of the cases, gaps only happen on the Monday morning open. So you can see this candle is the first Monday morning open candle after the weekend. Price gapped lower. We continued into the direction of the gap, but it's very important to understand that very often do gaps fill, which means that price has a very high likelihood of moving back into the area where the gap happened and then closing it. So you can see, although we broke here below the moving average, this was a break after a gap. And whenever you see a gap, then it is not a good idea to trade. Always wait until the gap has closed, and then you will very often see that after a gap you will get an initial impulsive move into the direction of the gap, but eventually price tends to close those gaps. At the same time, Monday morning reversals tend to be lower likelihood and low probability trade setups, so I usually don't recommend that we enter trades Monday morning on the first one or two candles, but at least wait until the European session has started on Monday, until more traders have entered the market, and we can get a better understanding and feeling of how traders view the markets after the weekend and how they position themselves. The same thing then happened the next Friday or the next Monday here. We gapped lower after the weekend. We continued into the direction of the gap. You can see we gapped over the moving average here. Again, it is not a trade because price tends to fill the gap, and that happened here a few candles afterwards. Price continued or moved against the gap. It continued to close the gap and then even continued the rally. But then here you can see very nicely price moved here into the top. We had a triple top. Let's take a look at the RSI here. You can see we had some type of divergence. You can see here price was making higher highs. The RSI was showing us lower highs, and the RSI divergence is not a must-have criteria. If you look at the checklist that I provided you earlier, the RSI divergence is just another confluence factor. It is not a must-have, as I said, and sometimes you don't get RSI divergence, which does not mean automatically there is no trade, and that is also something to be aware of. Then here at the top you can see we have our engulfing candle, which is a candle that is completely engulfing the previous 1, 2, almost 3 candles here. A very high injection of momentum with a strong momentum. And then here afterwards with this candle we break the moving average here to the downside. This would have been classified as an entry signal. You can see we move sideways for 1, 2, 3, 4 candles. We never really push against the trade, or we never really push higher against the short-term trend direction. You can see here price moved higher here but immediately reversed, so this is also a very interesting confirmation signal, a rejection of the highs here. And also, as I said in the previous video, on the 4-hour chart you can often see those wave behavior. This wave behavior is often classified by 2 or 3 very strong candles and high momentum candles during the day, and then as price moves on, as we go into another trading session, here in New Zealand US dollar, it tends to be more active during the Australian and the Asian session, not so active during the American and the London session. So that is something to be aware of if you have your move here, which probably this happened during Asian and the Australian session. Then here, once we moved into the European session and the American session, we just traded sideways. If you don't like the price action, if you think it is not going well against, or it is not confirming your trade idea, you can cut your position, maybe scale out half. We will get into trade management later on. Just that is the first idea how you can manage that. But you can see we never really push against the trade and the trend direction here to the downside. And if you cut your trade, there's not a problem with that. As I said, almost all the reversal trades will give us multiple entry signals, and you can see here we had another momentum shift, another very high momentum candle here. At that point, we were also moving then below this previous support area. We can see that here we have a very strong support area, lots of wicks in this area, and then here we finally break below that. This was then the final signal that we were moving away from the highs, and then you can see a very nice downtrend afterwards. Then here we can follow price action a little bit, and there are multiple scenarios and setups here, and it's a good learning opportunity and it's a very good learning opportunity in this market. So you can see here we are coming from a very nice downtrend. Price stayed below the 20-period moving average for quite some time. This is the ideal scenario when it comes to our swing reversal and swing transition setup. And you can see here at the bottom we continue to move lower. We have very clear trend waves, very clear trend structure. If you remember our local structure video, you can see that here is our double bottom, a very nice pattern, which indicated that price was not able to push lower. But the real signal happened here afterwards. Once we had this huge injection and this huge and strong move above the 20-period moving average, we can take a look at the RSI as well. In this case, we don't have a full divergence. It is a slight divergence. You can see the RSI at that point, it was making a higher low. The price action was showing us a double bottom, so it is not a classical divergence, but you can already see that the price was not favoring the downside. And here then we have this very strong momentum shift. Again, in this case, we have a much longer period with 1, 2, 3, 4, 5, 6, 7, 8 candles on the 4-hour chart. So that's 32 hours. Again, we are not seeing a real move against the long trend direction. So if you decided to stay in a trade, there's probably nothing wrong with that. If you try, or if you cut your trade a little bit, again, not a bad idea. If you are protecting your downside, if you think that this is not validating your trend idea, not a big problem at all. But again, when we just look at price, we can often see those periods where you have high momentum followed by periods of inactivity, high momentum, slow period, high momentum, slow period. And especially on the 4-hour, this behavior is very common, and you will see that over and over again. Then here we have our flip zone. You can see very nicely how support becomes resistance, becomes support again. Here another very interesting high momentum candle. Again, we move back here, we have another retest. Then this is a very nice stepping behavior where price is now making higher highs, higher lows, higher high, higher low. And you can see here again, we keep on breaking the highs, which is then showing us the new trend direction and a very interesting upside reversal. Then here we just follow price action. We can see here what happened. Price made the uptrend here, a very nice rally. Then here we had our break of the moving average, but again, this is not a break that happened at the moving average, but you can see here price spent a long time just crawling down, and then here once it reached the moving average, we just crawled sideways. And this gave a lot of time for the moving average to catch up with price. In that case, price was not really breaking the moving average. We never really had a high momentum candle like we did here. So here, this is not a short reversal, it's not a short setup, and it's very important that you know about this pattern because it happens quite often, and after a long trending period, you not always get a full reversal. Sometimes you will just see that price enters a sideways market, and that is very important to know. Then here, price resumes its uptrend. You can see we have two more trend waves to the upside. Then here it looks different. You can see here we are picking up short momentum after, again, here a very classic market top pattern. The bullish momentum is clearly fading. We are just moving sideways. Before then, the sellers step in. We are driving prices lower. And again, you don't get a full reversal, but you have a very small consolidation or a very small short-term reaction. If you decide to enter here short, probably nothing wrong with that. We are breaking the moving average with strong momentum, and we're coming from this nice structure. So if you get in short here, this is not a bad trade. It is not a signal, or it is not a bad signal. You can see we have a lot of our criteria. Then we just drift sideways. We're retesting the moving average here 2 times, but you can see it's not really going anywhere, and you probably have a lot of time to get out of such a trade for a small win, a slight break-even trade. And so you can see how you can read that market structure and this market as well. Let's take a look at a few more examples, and you can see again we are coming here from a downtrend, very nice trending structure. We are always staying below the 20 period moving average. We are pulling away from it into this bottom here, and then you can see here we have a small consolidation at the bottom before we have this huge injection here of buying power, of buying momentum. You can see very clearly we are breaking here above the moving average with a high momentum shift. And you can see in the next candle, we come back into the moving average, we retest it, we pull away. So at that point, it is a confirmed retest. And there are 2 ways to enter this trade. If you don't trust the first candle, then you wait until you have your retest pattern. And then you can see we are also pulling here above the previous swing highs and swing lows. You can see here support becomes resistance, becomes support again, and a very nice structure here to this market. When we zoom out, we can see where this is taking us, and you can see here we probably have some confirmation here, some confluence. You can see a very strong double bottom, and you can see we have a small overreaction here. But again, we are not trying to catch the absolute top and absolute bottom. We are not going to automatically enter our long trade here just because it is a previous strong support area. But you can see here we find, or we overshoot that, we come back up above it and then start our rally. And so again, this is a very perfect example of the crowded trade, which I talked about before. When a support level or resistance becomes too obvious, then at one point those levels tend to fake out and price tends to overshoot them. And then this is what happened here. We fall below the level, and then we immediately pull back into the area and then start our upside reversal. And you can see we have a nice trending structure afterwards, 1, 2, 3 or 2.5 trend waves. And again, remember the local structures video. You have your double top here. Again, what I really like about this here is our failed breakout attempt. Many people who were looking at this were probably already short at that point because it looked like price was breaking here below the moving average and making new lows, but we moved back into the area, a very interesting squeeze. And then afterwards, once price was not able to push here above the highs, it showed clearly that we are not having enough buying power. And then here we have 2 candles where we see very strong selling momentum. The first one stopped right at the moving average. This was a tough call. If you decide to take it or not, depends on your style. We are closing right at the moving average, and although we have a very strong short-term candle or short momentum candle, it is not a must entry. If you decide to wait one more candle, there's nothing wrong with that. You can see we kept on trading lower, so if you want to take a later entry with more confluence, that is not a problem. If you are a little bit more on the risk seeking side, if this you think is a good enough signal for you, then you can certainly take that. we can see we do have a very important area here. So it makes sense that price is struggling here a little bit. You can see resistance turns into support, and now here price broke below that here with the second candle. We came back into this here, it used it as resistance, and then started here a new downtrend. And we can just follow price action, and you can see price repeats the pattern over and over again. You can see we have 1, 2, maybe 2.5 trend waves. You can see here another local structure again, a triple bottom. You see multiple attempts to move lower, 1, 2, 3 attempts. You can see here that is where we turned previously. We are just coming short of this support area, and then here eventually price breaks higher. We find a high momentum candle here after price breaks the moving average, and again we have a very interesting area here, a flip zone. Support becomes resistance, and now we are breaking above it, which is foreshadowing our upside reversal. And you can see how sometimes markets tend to be in this wave cycle where you just have a range market here with individual trend legs in between. So you can see here overall we are more or less moving sideways, a slight upside tendency. You can see here we are making higher lows here in the overall picture, but within the trend or within this more or less slow uptrend here, you have individual trending phases with different trending opportunities. And those markets are very interesting for us to trade, because during such a market it can happen that we get repeated trading entries with different swing patterns and different transitions. And let's look at one more example maybe. You can see again we are using the moving average for our market selection. We are coming here from a range market. You can see no trending action whatsoever. The moving average was falling in the middle of price action. Price was just going up and down, no real trend direction, no real trend impulse. And that is a market that we stay away from. That is where we just use our market selection knowledge and the filter criteria that we need at least a trend with 2 trend waves where we can see that price is pulling away from the moving average, just like what we saw here. You can see we are entering a very nice trending phase. Market is staying above the moving average for quite some time, multiple trend waves. Then here at the top we are seeing a very nice rejection pattern. You can see we are trying to move higher, price is being pushed lower. Then we see following this momentum injection, you can see very strong bearish bars. It is very different than anything that we have seen here previously during this uptrend. Suddenly we have, after this rejection, strong selling momentum, which is bringing us below the moving average. You can see that here. You can also see that there is some type of flip zone. Here the second last swing high, it's being used as support, and now here even after this break we come back into it. We retest not only the 20 period moving average, but we also retest this flip zone. So if you didn't get in here, you can still get in here after this retest has been confirmed, after price is moving away from this area. So here or either here there are decent entry opportunities, and you can see that it gave us a decent shorting opportunity, potential short trade. Again, we can use our knowledge here. Where did price end the short-term trade? You can see right at this previous flip zone here, this was the top of the range, it became support here, and again it is now acting as support again. Decent shorting opportunity here after such a nice trend line, after such a nice swing reversal. And now we have taken a look at many different types of reversals, many different types of swing markets. I've shown you what to look for in a market, what is a good reversal, what is not a good reversal. We also took a little bit of a look at retest or at finding re-entry opportunities, at timing our entries with different opportunities and different criteria. And again, we are just getting started. The swing reversal is just one very niche way of trading. In our next 2 modules, we will learn even more patterns which will help you get into different transitions and different reversal setups. And then in the module afterwards, we will take a very deep look at retest and re-entry opportunities, which are also going to help us get into many more trades and help us to identify lots of high probability trade setups. So for now, I just suggest that you get started with the swing reversal, take a look at the markets, follow the screening process, be very picky, be very selective, only choose the best trades where you have the most filter criteria, and then post your trades in the forum. Let us